I'm sure, like me, you spend a lot of time thinking about the best things to invest in. Stocks, bonds, mutual funds, Bitcoin, you name it. But then I had a thought. Rather than trying to figure out how to get rich, why not just see what rich people invest in and copy them?
Everyone wants to be rich.
They've got all the money, so they must be doing something right, and those super yachts and fast cars don't exactly pay for themselves. I mean, why bother trying to figure all of this out ourselves when we can just look behind the curtain and see what's really happening?
You got any money?
No.
Loser.
So I set out on a mission to find out what rich people investing, the millionaires and the billionaires here in the UK and over in the US. So I want to know what kinds of things they invest in, where they keep their money, and most importantly, how they make sure that they don't lose it all. And as normal investors, do we stand a chance of ever building up wealth on our own, or are the super rich too far ahead with all of the perks and privileges that money can buy? And while they open many doors with a black card, us mere mortals are just trying our best to stay in the black. So when I started researching, I came across a recent blog post by Nick Majuli, who writes here on this site of Dollars and Data. And this post is called Where Do Millionaires Keep Their Money? It looks at a Vanguard study done over in the US about where some of their wealthier clients keep their money, and most importantly, what they invest in. First things first though, what do we mean by rich? When I imagine rich, I always go to the extreme, and for me, to be rich, I always picture the big house, the fancy cars, clothes, holidays, and all of the trappings that go along with it. But what do the numbers say? Well, here in the UK, the richest 10% of people own around 50% of all of the wealth, as you can see here from this report from the Resolution Foundation. And the top 1% own a massive 20% of all the wealth. On a positive note, at least inequality isn't as bad as it was back in the early stages of the 20th century, when the top 10% owned more than 90% of all wealth, but still got a long way to go. Anyway, what does that actually look like in reality? Well, here's the UK split up into 10 sections, from those with the least wealth to those with the most. So on the high-end side, to be in the top 10% of the country, at least when this data was published, you'd need to have £1.5 million on average, but the minimum of 700k will just about sneak you into this group. Working our way down, if you want to be in the top 20 to 30%, things do drop very quickly, and you need assets worth around 300k in total to get in. Now, I don't know about you guys, but that was definitely a lot less than I was expecting, and I can see why many people might have wealth like that in property, for example, but still not think that they're actually really that rich. Unfortunately, slightly scary to see is that the bottom 40% either have no wealth or a negative net wealth, meaning that they owe more money than they have, but that's another story for another video. If we jump over to the US side, the Vanguard study that Nick's blog post was based on considers rich investors to be anyone with 500k on the Vanguard platform, and the median average person worth around $1 million. So that's definitely on the higher end when compared to the UK data. But let's now actually see what they're invested in. I predict we're going to see some exotic investments, all in on Tesla and Bitcoin, and maybe even some other high-risk plays, because surely to get rich, they'd need to be super risky and get a lot of luck along the way.
Loser.
Have a think for yourself before we actually look at the data. I'm going to be really interested if you actually guess what the reality looks like. Okay, first up, here's what Vanguard say the split is between stocks, bond, and cash for their wealthy clients. This was between 2015 and 2019, and on average, we're looking at about 65% in equity or stock, about 25% in bonds, and 15% or so in cash. Interesting, I would definitely have thought that those rich people would have been a bit riskier. Now, what are the juicy details of what they're actually invested in? Show me all of this Tesla talk, show me the secrets, and while we're here, come on, there must be some hidden gems here that we can all copy. Kind of like how we can always look back at some of what the super investors are buying each quarter when they publish their results. Think we might be pretty disappointed here, guys. On this page of the Vanguard report, we can see what people are actually investing in, and it's pretty boring, to be honest. The vast majority of investments from this wealth report are using mutual funds and index funds, just your usual bog standard investment that any of us can get hold of. There are some individual stocks here, but only about a third of accounts are buying them, so there must be a bit more to the story then. What other assets have rich people got that they're hiding away from us? The Vanguard report won't tell us this, so let's quickly head back to the UK data, as I'm sure this is going to be similar anyway. If we ask the question, what assets make up a rich person's portfolio, we actually see that there's a lot more than just stocks, bonds, and cash. Now let me get up on screen now this chart that shows us the different kinds of assets that make up someone's wealth depending on how rich they are. Now here's the real stuff that we're looking for. So as you can see, we have everything from pension wealth, property, financial, business, and physical. There's definitely some interesting trends. Let's see what makes the rich really rich. One big thing that stands out to me is that the top 20% and 10% actually have a huge amount of wealth built up in pensions, and this actually makes up more wealth than property when you compare it to people somewhere in the middle whose largest asset is actually their home. That probably won't surprise most of you, whether you're here in the UK or the US, where we've seen house prices continue to beat inflation over the past decade with super low interest rates and lack of supply coming onto the market. What surprises me here is that when you look at financial wealth, which is where all the investments sit, like stocks, shares and bonds, this actually makes up quite a small amount, although pension wealth is of course going to have lots of investments in too, so it does skew the numbers a bit. The richest households don't seem to have taken massive risks to get where they are. So as you can see here, the top 10% of wealthy families in the UK have almost 20% of their wealth in financial assets. And interestingly enough, this is similar to some of the less well off from the top 70% who have also got a similar percentage, even though the amounts will be massively different. Now, one thing that's really starting to show here that we haven't really touched on yet is business wealth. And this blue bar really starts to grow as we look at wealthier families who, to no surprise, will hold a lot more of their own businesses. The further you go to the right and to the rich, the more and more you see people who own a business rather than work for someone else, which shows us that having equity in something and owning that asset is a lot more important than trading your time for money. Hey, just very quickly, if you are enjoying the video, please do me a huge favor, hit the like button for me, subscribe to, and drop a comment below. It does really help out small UK channels like mine, help make more content for lovely people like you. And now with that done, let's get back to looking at being rich. But we're still not getting the answers that I set out with at the beginning. What do rich people actually invest in, and what really makes up their wealth? Well, here's part of the answer, and you'll see from the same UK report here what actually makes up their financial wealth. Again, we're looking at a chart from the lowest wealth to the highest, and this time we're breaking down the financial wealth, so anything like stocks, shares, cash, and savings. As you can see, there's a clear difference between what the wealthy invest in versus what those less well-off have. There's obviously a lot fewer zero return assets, so that's basically cash and any stuff you own. Clearly, the rich don't see the need to hold on to cash too much, and it's no surprise really, because cash gets eaten away with inflation and will end up just losing buying power if you don't do anything with it. What's really interesting though is that the rest of the assets don't look too crazy from what I would have expected. The bulk of the wealth is in safe assets, and this has been described as mutual funds or investment trusts, as well as insurance products too. And then there's still a good chunk of savings here, and then interestingly enough, the richer you get, the riskier you get as well. Although this report says a risky asset is a share of a company, so it's not really what you'd expect. And to be honest, only around 10% of their assets are risky assets. I think we need to dig a bit deeper because this isn't giving us enough of the juicy details. Okay, so thankfully, jumping back into Nick's blog, he referenced this cool infographic from Visual Capitalist that shows us in a much better detail how the rich invest, or at least where they have their wealth. This one's really interesting. We go from those worth all the way from $10,000 to over $1 billion, and there's definitely a lot to learn here. So the biggest standout for me is how much business makes a difference to the super rich. Now, it's not a surprise when you consider that the wealth from big companies, especially public ones, makes the difference. People like Elon Musk, Bill Gates and Jeff Bezos aren't exactly walking around with loads of cash. Instead, their real wealth is in the shares of their companies, which can change all the time depending on how excited investors are in the stock market. Outside of the business, you still find the same old story though, lots of mutual funds, stocks, fixed income and trusts, especially when we focus on the middle section, which has very wealthy people in it, but not the super billionaires who operate on a different league. One interesting thing to point out here is this orange bar. Look at car wealth from the top 2 or 3 groups. Clearly, if you have a very low net worth, then your car could make a big portion of it up, but I say this is probably too much and even too big when we get to the 100k and even $1 million club. Without seeing the data behind it and the individual situations, I bet that many people in this section still don't see themselves as wealthy and also spend way too much on things like cars, clothes, and other things to impress people to look rich, when for the super rich, they're spending their time focusing on getting as many assets as possible rather than trying to show off. They still flex a bit. I mean, Bezos literally flexes. That man is a tank now. Okay, so there's rich and super rich and all kinds of things in between, but we're seeing a pattern emerge here, I think. Firstly, that to be rich, you invest as much money as you can into assets, those things that have a good chance to increase in value rather than lose it for you. Secondly, that you stay well diversified and keep your costs down, especially once you get wealthy. You want to stay that way, and as I always remind myself, nobody knows the future, and no matter how confident you might be on your ability to pick the right investment, bad things happen and often do, which can easily wipe out all of it in one go if you're not careful. One thing you'll notice here, and actually this is what Nick concludes in the blog, is that investing isn't the thing that made people super rich. If you want a piece of that super high 1%, then you're going to need to do something a bit special or inherit some from one of your ancestors who may have done pretty well for themselves. However, if you want to get wealthy and stay there, then you need to invest the boring way. What was interesting from looking at this data is that there aren't any secrets or fast ways to get rich here that aren't already accessible to you and me. In fact, it's never been easier for you and me to get started investing, as low-cost index funds with very low fees to get into are now more available than ever before. And there's a ton of investing platforms out there both here in the UK and in the US that let you invest for free or almost nothing. Oh, and also notice how there was no mention of hype stocks, crypto, or getting rich quick. In fact, although I'm sure there's plenty of people running around with new money who did make it out alive, like I've said before in another video, these people are outliers. And some might be geniuses, but some are also very lucky too.
Loser.
Finally, let me leave you with this point just before you get discouraged about trying to get started investing, thinking that everyone's already ahead of you or that you'll never make it into a report like this. The Vanguard study actually shows us something really important right at the beginning that we might have missed. The average stats of the people they were speaking about were aged 66 years old, were part of a household of 2 people, and had their account open for 21 years. And although this is a huge number to look at, over $1 million, when you break it down, it's not super crazy, and it does show what's possible with a lot of saving, sensible investing, and doing everything you can to avoid selling out when everything around you is looking bleak. Oh, and definitely don't YOLO everything into a single stock or a coin with a dog on it. That doesn't make it into this report, unfortunately. Sorry. Now, if you've enjoyed this video and want to know more about how some of the richest investors spend their money, then watch this video I did talking about some of the best books on money and investing that I've read. Again, I think you might be surprised by what I've found, and it might just help you on your own investing journey. Otherwise, enjoy this next video, and I'll see you in the next one. Happy investing.